Welcome back to our channel, where we bring you valuable information to help you navigate the complexities of personal finance. Today, we have an important topic to discuss: single, married, joint, or separate, weighing the pros and cons of different tax filing options. In this video, we will explore the pros and cons of different tax filing statuses: single, married, joint, and separate, so you can make an informed decision that suits your financial situation. Let's get started. When it comes to filing taxes, choosing the right filing status can significantly impact your tax liability and overall financial well-being. So let's begin by understanding the advantages and disadvantages of each option. First up, we have single filing status. This status is for individuals who are not legally married or considered unmarried for tax purposes. Here are the pros and cons of filing as single. Pros of single filing. One of the advantages of filing as a single taxpayer is simplicity. Compared to married filing options, filing as single generally requires fewer calculations and is less complex. Additionally, single filers often benefit from lower tax rates, especially if they have lower incomes. They also have the freedom to claim individual deductions and credits based on their own financial situation. Cons of single filing. On the flip side, there are a few drawbacks to consider. Single filers may have limited deductions compared to married couples, especially when it comes to certain tax breaks like the child and dependent care credit or the earned income tax credit. As their income increases, single filers may face higher tax rates, which could result in a higher tax liability. Now, let's move on to the married joint filing status. This option is available to couples who are legally married on the last day of the tax year. Here's what you need to know. Pros of married joint filing. Married joint filers often benefit from lower tax rates compared to single filers, particularly for couples with disparate incomes. By combining their incomes and filing a joint tax return, they have access to a wider range of deductions and credits, including certain tax breaks that may not be available to single filers. Filing jointly also streamlines the tax process by combining both spouses' income and deductions into a single return. Cons of married joint filing. There are a couple of potential downsides to consider. One is the concept of joint and several liability. In this case, both spouses are equally responsible for any taxes owed, even if one spouse's income is the primary source of the tax liability. This can lead to financial risks if one spouse has outstanding tax debts or underreports income. Additionally, some deductions and credits may be phased out or reduced when filing jointly, particularly if both spouses have high incomes. Lastly, let's explore the separate filing status. This allows married couples to file their taxes separately. Here's what you should know. Pros of separate filing. Filing separately can provide personal liability for each spouse's tax obligations, protecting one spouse from being held accountable for the other's tax debts or errors. In certain situations, filing separately may result in lower overall tax liability, particularly when one spouse has significant itemized deductions or qualifies for certain credits. It also allows for financial independence and control over each spouse's individual tax affairs. Cons of separate filing. There are a few disadvantages to consider. Filing separately often leads to higher tax rates compared to filing jointly, especially for couples with higher incomes. Some deductions and credits may be limited or unavailable for married separate filers, reducing the potential tax benefits. Filing separately also requires additional calculations and coordination between spouses, which can be time-consuming and increase the chances of errors. Now that we've explored the pros and cons of each filing option, let's compare them based on key factors to help you make an informed decision. Comparing the filing options. Comparison 1. Tax liability. Single filers benefit from lower tax rates for lower-income individuals but face higher rates for higher-income individuals. Married joint filers generally have lower overall tax rates, especially for couples with disparate incomes. Separate filers often experience higher tax rates, potentially leading to a higher overall tax liability. Comparison 2. Deductions and credits. Single filers have individual access to deductions and credits based on personal circumstances. Married joint filers enjoy combined access to deductions and credits, potentially resulting in greater tax benefits. Separate filers have limited access to certain deductions and credits, which may reduce tax savings. Comparison 3. Financial responsibility. Single filers have sole financial responsibility for tax liabilities. Married joint filers share joint and several liability, meaning both spouses are responsible for any taxes owed. Separate filers have personal liability for each spouse's tax obligations, providing financial independence. What factors should be considered in choosing a filing option? When deciding which filing option is right for you, consider the following factors. First, evaluate your income levels. Determine whether filing jointly or separately would result in a lower overall tax liability based on your specific circumstances. Second, consider spousal income disparity. If one spouse earns significantly more than the other, filing jointly may offer more tax advantages. Third, assess your itemized deductions. Determine whether itemizing deductions or claiming the standard deduction would be more beneficial for your situation. Fourth, research the state tax considerations. Some states have specific regulations for married couples filing separately, so it's essential to understand the tax laws of your state. Choosing the right tax filing option is crucial for optimizing your tax situation and financial well-being. Whether you decide to file as single, married joint, or separate, each option has its own advantages and disadvantages. Consider your income, deductions, credits, and individual circumstances to make an informed decision that aligns with your financial goals and objectives. That wraps up today's video on tax filing options. If you found this video helpful, be sure to give it a thumbs up and subscribe to our channel for more valuable content. Thanks for watching and see you in the next video.